time. Risk sentiment is on the mend, clearly, and we are wrapping up this week in much better shape and form. And there is no bad news flow hitting us. Are we set up for a bit of a rally globally, in your opinion? Equities, Dean?
Well, I mean, for the U.S., we put the market back to uptrend. We had a follow-through day yesterday on the NASDAQ. The S&P has yet to follow through, but we're considering both markets to be an uptrend. But I would say the breadth is still a bit narrow. So as an example, we had 85% of New York Stock Exchange above 150-day moving average beginning of February, but now we're sitting at around 37%. And in terms of sectors, semis and software, they're holding up quite well, and some cap equipment as well. But financials, transportation, retail, they're struggling at the moment. So it's a classic case of cyclical sectors not doing so well at the moment. Perhaps the money's flowing into areas like semis and software, where we have some tailwinds. We see some big catalysts coming, such as AI, ChatGPT driven services that are about to come on. So the market is holding up quite well. Both indices are above moving averages. So as an example for NASDAQ, we're looking at next resistance at around 12,300 with support only 2% away at the rising 10-day moving average. For the S&P, we're looking at support at around 50-day moving average, which is 1% below, with resistance at around 4,100. So we're hopeful that this follow-through is going to stick with us. But then, we have to be mindful of data that's coming out. So, for example, next week, we're going to see payroll data coming out, and the week after that is a CPI. So depending on what the data shows us, I think the market's going to react according to that.
Okay, got that. So you are a bit optimistic on the market overall, but what about India, Dean? Because this morning we've woken up to a big upgrade that came in from Morgan Stanley on the Indian markets, and they say that the valuation premium is now narrowing, so it's looking like a good time to buy since India is very resilient as well. What are you seeing on the charts, on the Nifty? Do you think the worst of the fall is behind us, and what does the trajectory look like here on?
Yeah, I think the Indian market has a bit of work to do. Trading below the 200-day moving average. But when I look at the rest of Asian markets, for example, Hong Kong, we put Hong Kong into uptrend a couple of days ago. Taiwan is still doing well. Korea is over 200-day moving average. So we're heading in the right direction. So for when I look at Sensex, I think the next support is only 1% away at 57,000. And resistance obviously is at the 200-day moving average, but that's only 2% away. So I think if we can get over that 200-day moving average, you're going to see breadth, broadening out. When I look at the data, I think it's only about 35% that's trading above 200-day moving average at the moment, where it was more like 65% a couple of months ago. And when I look at the stocks that are kind of breaking out in India, it's concentrated towards cap equipment, building materials, and maybe a couple of names in retail. But that's about it. But we would like to see more stocks breaking out, and we'll probably get that if the index can, get over the 200-day moving average.
All right. Hi, Dean. Good morning. But Dean, if you're allocating money to some of these Asian markets, does India feature at the top? Because you're mentioning, the Hong Kong market, the Korean market, they're looking good as well. So incremental money goes to India or it goes to other markets? And also in the past, you've spoken about a couple of banks here in India, ITC as well. A couple of stocks that you all would have been buying in the last month or so?
Yeah, I think India still is a fantastic place to invest, because when you look at it fundamentally, GDP growth is still outpacing rest of the world. So even, it's been revised downwards for fiscal year 24. You're still looking at above 5.5% GDP growth. And I still would say, in terms of financial stock setup, the penetration of household loans is still very low. So banks are still going to grow 20% organically. You just don't see that in the rest of the world. So I think it's a fantastic market to look for opportunities. But we're mindful of the index where it's sitting. So let's make sure if we can get over resistance, then I think you'll find a lot of ideas coming through.
Okay, so India is a fantastic market to invest into. Just a follow-up here, between the large sectors, whether it is banking or IT, where do you see the maximum potential? You said this is a great market to look for opportunities. Where do the opportunities lie?
Yeah, we're still keeping a very close eye on the banks. So, HDFC, you have banks like federal banks, even State Bank of India, very, very good setup. It's sort of consolidating at the moment, and that's okay because as soon as I think, the US kind of settles and Fed is done with rate hikes and we see the economy kind of settling down, I think that's going to allay a lot of global fears. And that's when I think the Indian financials are going to start to react. And so we're definitely keeping an eye on the financial stocks. A couple of smaller stocks that are kind of popping up, stocks like Equities, small finance. So you have some of these smaller consumer finance type companies holding up really well, and we're looking for them to break out. So a lot of good ideas there.
All right, Dean, we leave it at that. On that optimistic note, thanks a lot for joining in and speaking to us. That's William ONeil saying that this is a great time to be investing in a market like India. They have their eye firmly on the financial stocks, and they do like a lot of stocks. He mentioned names like HDFC Bank, Federal Bank, State Bank of India feature on his list. In fact, a lot of positive opinion coming through on India this morning.